What's up, guys? It's your boy Freddy here. Now, in this video, I want to talk about why the stock market is bottoming and why I believe that we're not starting a new bear market or a stock market crash, and where I see the market headed over the next few weeks in March. Now, we had a pretty brutal 3 weeks, right? As you can see here in the weekly time frame, we had three red bars. This is surrounding Trump tariff talks. We had imposed tariffs on China, Mexico, and Canada. We also had reciprocal tariffs coming on April 2nd. We had tariffs on top of tariffs that are sparking trade wars and, recession fears and all of that. And so the stock market is panicking because they don't know what Trump is going to do. A lot of this has to do with uncertainty, right? People don't know how other countries are going to react. People don't know if this is going to be a longer trade war. And so people are pulling money off the sidelines just to see what Trump is going to do over the next few weeks. Now, we had some clarity surrounding concessions on tariffs with Mexico and Canada. So that's leading to a little bit of a rebound here, but I don't think that's going to hold. So as far as the bigger picture goes, as you can see on this weekly time frame, this green line here should be of utmost importance because I believe that we're going to be tagging this green line soon over the next couple of weeks. And you can see that every time we tag the green line, starting in 2023, we rejected off here, rejected, and we found support on this green line in late 2023, and we have not tagged it ever since 2023. And so I believe that the near-term target for this correction would be this green line here. And what is this green line? It is the 50 simple moving average on the weekly time frame. I believe that that is the ultimate target for this week-long or month-long correction to mark the end of this correction over the next few weeks. And so on the weekly time frame or on the daily time frame, you can see that we had a reaction off this 200 moving average, and this is this blue line over here. And from trader psychology, everyone's watching this line, right? So it's not unusual to expect some sort of reaction off of this line. So that's what a lot of people are paying attention to. And we could possibly get some sort of rebound or a Fibonacci retracement after, straight weeks of selling. This is possibly the first possible bottoming bar that we've gotten in over 3 weeks. And so I believe that the near-term target should be that 595 level, which is that green line here, and that's also the 50 simple moving average on the daily time frame. This is also around the 50 to 60% retracement level for the Fibonacci retracements from this high to this low over here. As you notice, the MACD, it's still negative. So what does that mean? Bearish momentum is still here to stay. Unless we get some sort of crossover, as you can see over here, from bearish to bullish momentum, we're still going to be selling the rips, right? Every single people are going to be looking to sell the stock market right around this 595 to 600 level or wherever the rebound ends, right? And so this is for the near term. Oops, sorry about that. Let's go to charts. And this is for the near term, right? We're finding temporary support at this 570 level. Eventually, though, I believe that we tag this 50 moving average on the weekly time frame, which is around that 563 level, and possibly even overthrow it at 560. This is also pretty significant because if I go back to the weekly time frame, this is also this horizontal support level that coincides with the top at around July of 2024. And we broke above it and we retested it. So this is a reasonable level to expect strong support, which also coincides, like I said earlier, with that 50 moving average. And so that's ultimately where I believe we're headed. As far as timing goes over the next few weeks, it's possible that we bottom on the third week of March. And let me explain why. So I posted this on Threads, and I said that timing wise, I don't think the stock market will bottom before the Fed meeting March 18th to 19th. Those meetings seem to act like trend reversals and catalysts for a change in trend. Just a hunch, and also March OPEX on the 21st. So that week, we have options expiration. We have the Fed meeting on 18 to 19. That's going to be crucial for all these investors to deploy cash and get back on the sidelines because investors are waiting to see what the Fed will do over the next few months. if they don't have that information, there's no clarity at all in the stock market and around surrounding the Fed policies, and investors will not deploy cash and put money back into the stock market. So I believe that big money will stay off the sidelines until we get that clarity, right? And as you can see on the economic calendar, we have a bunch of reports coming out over the next couple of weeks, starting with the US job report, unemployment rate on Friday. We have CPI and PPI again next week. This could cause more inflation fears surrounding the tariff talk and all that. So this could be another catalyst for another sell-off to that 560 level that I was mentioning to you earlier. So this is coming next week. And then third week of March, it's not listed here, but on the Fed website, the third week of March, we have the FOMC meeting, and then we have OPEX. And so that's why I believe that we could possibly bottom near that third week of March. And as you can see, the fear and greed index, like I mentioned last video, we're still at extreme fear. So that's telling you that a lot of people are still panic selling. A lot of people are still keeping money off the equity market, people keeping money on the sidelines. And so this is not where you want to be selling. This is exactly where you want to be buying and buying the dips and getting into the market. So not financial advice, of course, but obviously this is what I would be doing over the next few weeks. And we're still in bearish momentum on the weekly. As you can see, we're still selling off. Momentum is still bearish on the weekly time frame. So it's still in a sell the rip mode. And that's what I'm going to be looking for the next few weeks. If you guys found this video helpful, go ahead and give me a like, hit that subscribe button. And if you have any questions about the S&P 500 or the overall stock market, go ahead and leave them down in the comment section below. I'd be happy to answer that anytime. And I will see you guys in the next video. Peace.